Turn, given that today it's expiry?
Doesn't look like, Aisha. I think it's just a routine normal day. Even after a gap, I think there was maybe some expectation that if the risk off is happening for different asset classes, like for I think some trim off for gold, silver prices, Bitcoin, then I probably thought that maybe that could trickle into some bit of resemblance of stability or a decent bounce on the Nifty. So we had a decent bounce on the gift Nifty on I think Tuesday, late evening. But I think post that we've actually recovered and come back into the normal territory for the index mark for the gift Nifty. On the data front, there's nothing meaningful which has changed. In fact, over the last 5 or 6 consecutive days, we've actually seen some very mild and a steady pickup in the short side on the FI derivatives data, the open interest data on the FI side. So that indicates that maybe the tilt is still towards the negative side in terms of the short positions. And I think given today's the expiry, we're bound to see some bit of late second half volatility. But I think what the markets are also lacking is any kind of a major sector trend. Like for example, 2-3 weeks back there was the very strong resurgence or a recovery for many private sector banking names. Then last week, I think first half we saw the metal stocks making a comeback. But then the last 2 days of this mild tepid range for the index, we've not seen any major sector participation. So I think we need to see that shaping up. If there are a couple of sectors which starts to look attractive, maybe that could lead to some bit of steady momentum. As of now, it's purely stock specific and nothing much which changes, except if we break below 20 to 500 mark on closing basis, I think we could be looking at another 300 to 500 point correction.
Naresh, what is your sense?
So we are still in a downward drift. FI flows continue to be negative, and that remains the concern. So we've seen a large part of the selling to be done in compared to various markets. So we've seen 3.2 lakh crores of FI selling. Say in 2008, 2022, we saw 5% of peak value being sold. That comes to 4.25 lakh crores. So if we were to do a similar selling, we are 70-80% through. So in this case, we start looking out for turnaround and reversal signals going forward. So from today is also the expiry day. So for now, 20 to 800 is where I would like to look at. If we start sustaining above those levels, that is where you call the reversals. On the lower end, the major supports are still lower, which is 21,900 to 22,200, roughly the closing price on election day. So for now, it's a slow drift. We are not seeing the breadth further deteriorate as such. So waiting and watching for price reversal signals here.
Okay, let's.
If you like this video, then like, share and subscribe to ET Now.